Do you think investing requires a lot of money? It's a common misconception, isn't it? The idea that you need a hefty bank balance to dip your toes into the world of investing. But what if I told you that's not the case? Welcome to our discussion about investing on a shoestring budget. You see, investment isn't just for the wealthy. It's for everyone who wishes to grow their wealth, no matter how small their initial capital might be. So, over the next few minutes, we're going to debunk this myth and introduce you to a world of investment opportunities that are accessible, even if you're working with a limited budget. From stocks to low-cost index funds to real estate, we'll explore various avenues that can potentially yield substantial returns without requiring a fortune. So, buckle up for an enlightening journey into the world of small-budget investments. You'll be surprised to learn that you can start investing with little money. Scene script. Have you ever thought about investing in stocks? Let's dive into this exciting world that has turned many a modest investment into substantial fortunes. Now, you might be wondering, but I don't have thousands to buy shares of big companies like Apple or Amazon. Well, that's where the beauty of fractional shares comes into play. Imagine a pie representing a single share of a company. Fractional shares allow you to buy a piece of that pie, instead of the whole thing. This means you can get a slice of high-value stocks even on a shoestring budget. It's like being able to enjoy a sliver of a gourmet cake without having to buy the whole dessert. So, how does it work? Well, let's say you have only $50 to invest. Instead of buying a whole share of a company that might cost hundreds or even thousands, you can use your $50 to buy a fraction of a share. You still get to partake in the company's success, but at a fraction of the cost. Now, investing in stocks isn't just about buying low and selling high. It's about participating in the financial growth of companies you believe in and potentially reaping the benefits over time. But remember, with potential high returns come risks. The stock market can be volatile, with prices fluctuating based on a myriad of factors, including economic indicators, company news, and global events. So it's crucial to do your homework. Research the companies you're interested in, understand their business models, and keep an eye on market trends. And of course, never invest money you can't afford to lose. Consider starting small, testing the waters, and as you gain confidence and knowledge, you can slowly increase your investments. Remember, even the most successful investors started somewhere. So, are you ready to take your first step into the world of stock investing? Remember, you don't need a fortune to start building one. Investing in stocks can be a profitable venture, even with a limited budget. Scene script. Are you familiar with low-cost index funds? If not, buckle up as we're about to take a deep dive into this affordable yet powerful investment option that's ideal for those working with a limited budget. So, what are low-cost index funds? In essence, an index fund is a type of mutual fund or exchange-traded fund that aims to replicate the performance of a specific index. These indices could be anything from the S&P 500, the Dow Jones Industrial Average, or other global and sector-specific indices. The term low cost refers to the minimal expense ratios of these funds, which means you pay less in fees, keeping more of your investment returns. One key benefit of low-cost index funds is diversification. You see, when you invest in an index fund, you're not just buying a single stock or bond, you're buying a piece of all the companies or bonds in that index. This spreads out your risk and can potentially offer a smoother investment ride. Another advantage is the passive management of index funds. They are not actively managed by fund managers trying to beat the market, which often leads to higher costs. Instead, they just track an index, which is why the fees are lower. However, like all investments, index funds have potential drawbacks. The performance of an index fund is tied to the performance of its underlying index, so if the index does poorly, so does the fund. Also, because index funds are passively managed, there is no chance of outperforming the market. Despite these considerations, the benefits of low-cost index funds often outweigh the drawbacks, especially for investors with limited capital. They provide an efficient, affordable, and diversified way to invest in the stock market. This makes them a great starting point for those wanting to dip their toes into the world of investing without breaking the bank. Remember, investing is all about long-term growth. Patience, consistency, and a well-diversified portfolio can go a long way in helping you achieve your financial goals. Index funds provide an accessible and diversified investment option for those on a tight budget. So why not consider adding them to your investment toolkit? It could be a game changer in your wealth-building journey. Ever considered dipping your toes in the real estate market? Well, believe it or not, You don't need a fortune to get started. Yes, you heard it right. The world of real estate is no longer exclusive to those with deep pockets. With a strategy known as real estate investment trusts, or REITs for short, even individuals with a limited budget can invest in this lucrative market. So, what exactly are REITs? Think of them as the mutual funds of the real estate world. They allow you to invest in a portfolio of income-generating properties without having to buy or manage the properties yourself. This way, you can benefit from the real estate market without the significant financial commitment typically associated with direct property ownership. Now, you might be wondering, what's the catch? Well, like any investment, REITs come with their fair share of risks. Market volatility, interest rate fluctuations, and property-specific risks are all part of the package. But remember, with higher risk often comes higher potential returns. And the good news is, the real estate market has historically shown strong and steady growth over the long term. One of the key benefits of investing in REITs is the regular income stream they provide through dividends. This can be especially appealing if you're looking for a way to supplement your income. Plus, they offer the added benefit of portfolio diversification, reducing your overall investment risk. In conclusion, REITs offer a feasible way for individuals with a limited budget to tap into the real estate market. They provide the opportunity to generate passive income, diversify your investment portfolio, and potentially achieve substantial long-term growth. However, as with any investment, it's essential to do your homework and consider your financial goals and risk tolerance before diving in. Real estate investing isn't just for the rich, and with REITs, you too can get a piece of the pie. Now, having multiple investment options is great, but how do you manage them effectively? This is where the magic of financial planning and portfolio diversification comes into play. You see, investing isn't just about putting your money into different baskets. It's about strategically balancing those baskets to optimize returns and minimize risks. How do you do that? Well, it starts with understanding your financial goals and risk tolerance. Are you saving for a house, retirement, or your child's education? Or maybe you're looking to grow your wealth aggressively? Whatever your goals are, they should guide your investment decisions. Next, diversify your portfolio. This means investing in a mix of assets like stocks, index funds, and real estate. The key is to spread your investments across different asset classes and sectors. This way, if one investment performs poorly, others may do well, balancing out your overall returns. A well-diversified portfolio can help you reach your financial goals, even with a limited budget. So, you see, investing isn't just for the rich. It's a powerful tool that can help anyone, regardless of their initial capital, build substantial wealth. We've walked through various investment options like stocks, low-cost index funds, and real estate, and discussed how each one can yield significant returns, even on a limited budget. We've also explored the importance of financial planning and portfolio diversification, key strategies for long-term wealth accumulation. Let's take inspiration from those who started with little and achieved financial success. Like the college student who invested her small savings in low-cost index funds and over time amassed a considerable nest egg, or the young professional who dabbled in real estate and now owns multiple income-generating properties. Remember, wealth creation is within your reach, even on a shoestring budget. Thank you for watching. Don't forget to like, subscribe, and hit the notification bell to stay updated with our latest videos.